Uh, if Trump wins, and obviously I suspect there are people with mixed feelings about whether that should happen, but we do have an opportunity to do kind of a once in a lifetime deregulation and reduction in the size of government. Uh, if Trump
A once in a lifetime chance for deregulation. And reduction in the size of government. And I'll tell you what, guys, if that's not reason enough for you to go vote Trump, I don't know what is, because that is the big problem here. Government here in Washington, D.C. has continued to grow, bloat, bigger and bigger and bigger and bigger. And it's like it never stops. And then every president that gets in, nobody wants to be the guy that, everybody wants to be the jobs president, right? They want to give out jobs to everybody. So nobody wants to be the guy that's actually shutting everything down in government and ending all of those jobs. They want to create jobs. And so this is this cycle that we have here. We go over and over and over again. And good morning to you, Sanjeev. And we never get out of it. And so this is a once in a lifetime chance, the great Elon Musk says. And I'll tell you what, he's talking about, you see what he did with Twitter, okay? He's talking about actually reducing government by 70%. And let me tell you guys, it should be more like 90%, but I'll take 70. I'll take 70%. I mean, this is legendary stuff here. This is life-changing stuff. Good morning, Sanjeev. This is like, guys, if we pull this off, I don't think that Trump is going to end the Fed or anything like that. I wish he would, but I don't think he's going to. I think that he may or may not understand. I don't know. He's a very smart guy, so don't get me wrong. I'm not saying anything like that, but I don't know. He's not going to do it. He's not going to do it. He has a lot of dollars. Okay, my man has a lot of dollars. He's not going to end the Fed, but he'll move us in the right direction. I mean, guys, here's the thing. If you close down 70% of the government, then all of a sudden you don't have to worry so much about the central banking cartel. I mean, you never have to forget those guys, but all of a sudden, like, the dollar's a lot stronger. Okay. You're not bloated. You're not bleeding money everywhere. So everybody thinks that the taxes get paid to the government. The taxes don't get paid to the government. The taxes get paid to the banking cartel. Then the government says, okay, we want this money, and the banking cartel gives them that money. That's the way it works. And I'm talking about the Federal Reserve, okay, the banking cartel, and the central banking cartel, the banking cartel. And they don't have to ask anything about monetary policy as well. They can print up as much money as they want and send it everywhere. As a matter of fact, Juanita Broderick, the great Juanita Broderick, put out a post yesterday. And Juanita Broderick, here she goes. And because Janet Yellen comes out. Janet Yellen. Who's Janet Yellen? Did you elect Janet Yellen? No, of course you didn't. So Janet Yellen comes out and she says that the U.S. is going to give $20 billion more dollars to the Ukraine. Everybody loves to hate on the Ukraine. Everybody, you're not allowed to talk about, we just gave $5.2 billion more dollars to Israel. We give them far more than Ukraine. It's just that Ukraine is easier to talk about. So everyone loves to talk about that. They love to hate on Ukraine. Ukraine is just an extension of Israel as it is right now. Trust me. Okay, that's it. Actually, if you look at the whole Greater Israel Project, it goes right up there. Ukraine is what used to be Khazaria, and that they think that's theirs too, and that's the Greater Israel Project. So Juanita Broderick, and I'm looking for the post right now. She puts out the post of Janet Yellen. Yeah, I'm so sick of this. Well, shoot, man, this girl tweets a lot. I can't hardly find her post now. I wrote underneath. Here it is right here. Let me, boom. Here it is. Let me share this. This old hag yelling, announcing another $20 billion of your tax dollars is going to Ukraine. Right underneath it. Are you starting to understand who our rulers are? I said. Now, the fact is, everybody's scared to say it. And I still want to stream on YouTube and everything too. You know, I hope. Of course, I have everybody commenting, oh, I know who it is. It's the globalists and it's NWO and it's the anything but saying it. I mean, I guess we all do it. We're going to have to figure it out, though. The banking cartel is all one group of people, folks. Anyway, you are watching on the Smart Money Culture TV network, as well as streaming around the world on YouTube and Instagram and all the rest of them. We are, I'll have my main man Matt coming on here with the market report. The markets are all over the place, as you can expect. We have we have a lot going on. Now, interestingly enough, and of course, the banking cartel wants the Democrats to win. I know a lot of people say, oh, no, because they're all Israeli. Banking cartel wants Israelis down. They want Trump to win. But strangely enough, they don't. They don't. Democrats are much more controllable, do whatever they want. That's their people, actually. They actually, Jews in the United States overwhelmingly vote Democrat. 73% are actually voting Democrat this time around. They're not voting for Trump. So, there you go. Now, the title here for today, and I love everybody. All right. But comes a time in your life when you gotta do it. Recession is locked in. More rate cuts coming as the banking cartel tries to bail out the Democrats. Iranian Ariane Tabatabai, whatever it is, has top secret clearance, but January 6th Trump supporters are blocked from getting it. Now, I'll talk about that in a moment, for a minute, and then I'll go into the rest of it, which is the delayed results that we're going to get on election night. So I want you to think about this for a minute. So you have this Iranian-born girl, which is nothing wrong with that, okay? But you have this Iranian-born girl who is the granddaughter or something like this. She's a family member of the person, I believe, who was involved in writing the Iranian Revolution that brought the Ayatollah to power, like the Declaration or the Constitution or something, right? I mean, this is somebody that's, pretty highly connected. It's not just like anybody, right? And she has top secret clearance at the Pentagon, and then everybody's upset that she leaked the plans to go in and invade. I mean, it's kind of a no-brainer. Like, of course she did. Like, it's her family, guys. It's her family. Like, you know what I mean? Like, what's she going to do? Like, she sit there and, and then meanwhile, most of you probably don't even know this, but if you're a unabashed Trump supporter, if you're supporting Trump openly, if you wanted to stop the steal, if you came to the Capitol on January 6th or openly supported it, you can't get a clearance. You can't work for the government in some type of capacity that you need clearance. So when you wonder why Trump is surrounded by a bunch of people that aren't like you, well, that's a big reason. Because the deep state is so embedded in the government that he can't even hire people like you because they won't approve it. They won't approve it. I mean, we're talking about, you were on X saying, stop the steal. And we had like all kinds of irregularities, let's call them, right? I mean, massive amounts of irregularities all over the place. I mean, Arizona, actually the state Senate or Congress or whatever, the state body had said, this is messed up. And that's actually what everybody's waiting for. We were all waiting for Arizona not to carry. And then, of course, more than likely, intelligence agencies started the mess, right? Started the riots. Everybody was there peacefully protesting. But if you were there or you openly supported it, you can't get a clearance. You can't get one. Never mind that the Constitution of the United States outlines what you do in a situation when you have a government that was doing what they were doing. You can't get it. But meanwhile, an Iranian-born girl, nothing against that, but an Iranian-born girl with connections to the Ayatollah, from what I've read, can get a clearance and work at the Pentagon. She's like the person who, this girl, Ariane, she's the person who was instrumental in putting together the nuclear deal or whatever that Obama touted as he went through. So you're blocked, and that's going to be a big problem. Okay, it's a big problem. It has to be fixed, guys, because here's the thing. So let's say Trump wins, and that's why I've been saying actually for a year that he might win, and they're just going to make sure he can't do anything. And that's one way they make sure he doesn't do anything, is that they don't have any patriots that are actually working for him. Zero. Like, if you supported the election after the bank heist videos, after watching everything that went on in Georgia, after watching the truckloads of ballots that showed up in the middle of the night, then you're either on the wrong side, period, or you're stupid. Either way, you shouldn't be working for the president of the United States, but that's the only type of people that he can hire right now. You are blocked. I'm about to bring Matt Dixon on, but I want to finish up the title here because it leads right into it. Already, Pennsylvania, Arizona, Michigan, and Pennsylvania, Arizona, Michigan. I put Arizona twice. Oh my gosh. That's in the title too. Pennsylvania, Arizona, Michigan, and what was the other one? Doggone it. Shoot. Now I'm on. I'll try to remember as I'm doing on with Matt. It's Pennsylvania, Arizona, Michigan, and one other battleground state. I can't remember now. Anyway, I'll fix it. Anyway, it's one more state. Pennsylvania, Arizona, Michigan. I don't know the other one. Off the top of my head, but I'll fix it in the title here. Hopefully, what we're doing the show. They will not have results on election day. They won't have them. They've already told us, hey guys, we're not going to have we're not going to have results on election day. Guys, we're like 15, 14 days out from the election or whatever, how many days. How can you just already say you're not going to have results on election night? Unless you're planning something nefarious. And we saw what happened last two times, actually. 2022 was a mess too. So these states are already claiming that they're not gonna do it. They're not gonna have results. So, like I said, I think either one. Of course, they don't let them in. It's hard for me to believe that with the magic electronic voting machines and all the mail-in ballots that they're going to let him win. But maybe they do let him win, like I said, and then he's just not able to get anything done except the stuff they want. Right? Very possible. Anyway, I got the Market Watch report here with the great Matt Dixon. Sir Matt, how are you?
I'm good, thank you. Good morning. Morning, everybody.
Nice
so when
after
the election, when is it that when the new president installed? When is that?
So January 20th is the inauguration day.
Okay. All right. Interesting.
It's always a cold day here in Washington.
Yeah.
I was out there on the first in 2016, I guess it was 2017 or whatever. I don't know anyway when they put them in. And it was like, so, everybody's like, anyway, whatever. I won't say it. It's fun. It's always fun.
Yeah, good. Anyway, I've shared my screen. Can you see that? I've got oil futures on it.
Yes, we can. We have oil.
Oil and S&P 500, the SPX. So the SPX is this solid red line above, as you can see, all-time high or thereabouts again. Oil price, as we know, has been falling off. I just wanted to show that there is some kind of inverse correlation there, wherever however far back you want to go. That it's not perfect by any stretch of the imagination, but there is clearly, you can see roughly they're going in opposite directions.
Yep.
There are periods of time like early 2024 when they both went in the same direction. So it's not hard and fast rule, just a general guide. But we can see there's massive divergence between them now, really, between the oil price and the S&P 500. And when there's such a big divergence, normally, eventually, it closes and you'll eventually get crossover again like this here. So that would tell you that most likely at some point in the future, we're going to see oil rallying and we're going to see S&P 500 come down. So that started to get me thinking about recession yet again. And It's not what people want, but we need to just look at what the evidence is out there. And the reason it came to mind is because there's a Goldman Sachs analyst came out and said, we've got 10 years of very poor returns ahead of us in the stock market. And there's a few people been saying that recession is just around the corner. So I started to gather a few of the usual slides. So this one we've seen before. This is the SARM rule indicator. It's never failed. So every time the SARM rule indicator goes above 0.5, we see recession shortly following. So every single time, historically, that's happened for the past 60 odd years now, almost 65 years, something like that. Every time it's indicated recession. So right now we have peaked above the 0.5 again. We're 0.57 at the moment. That was in August. I think we're maybe even a touch higher now. So we're above that 0.5, which is the magic number which signals recession ahead. So we've seen that one before, potentially warning us. Could be different this time around. In fact, SARM herself, she's a professor, she actually said maybe it's different this time round, but it's been accurate every time in the past for the past 65 years. So we're taking note at least. So I then looked at some other charts that I've had around. So this is looking at CPI inflation. As we know, CPI peaked and it started to fall. And again, that's been an indicator every time or virtually every time in the past. Not every time, it's not quite as strong a predictor as the SARM rule. But typically, like at the start here, back in the 1980s, this is 18, sorry, so looking over 100 years ago now, we can see CPI peaked, and then shortly after that, CPI was falling rapidly, and we got recession. And that's happened with, reasonable, I mean, not perfect, but reasonable accuracy. We've seen them roughly coincide. It's not a perfect indicator, but just to say, once again, right now, if you looked at it again now, we've obviously seen CPI peaking. It has come down, as we know. It's still elevated a little bit in the US. It's above target, but it has been coming down dramatically from the peak just a year ago. So that's another sign that maybe perhaps recession's around the corner. So I'll just go on to my next, see what we have here. So here about Fed funds rate. When Fed fund rates peak, recession follows. And again, that's been pretty accurate going back 70 years or so. We can see a peak here in Fed funds rate, and then when it starts to fall, it's recession. So we know the Fed has started to reduce rates now. They just dropped them 50 basis points. We've probably got another 25 basis points coming in a couple of weeks' time. It's November the 7th, I think, the actual rate decision. So just a couple of days after the election. But you can see here, when the Fed funds rate drops, it's coinciding with recession on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 occasions. Is also, it's now 11 and maybe 12 this time round. So it's been, quite an accurate predictor of recession coming. So obviously the Fed are going to start to reduce rates dramatically when they see growth slowing. So that's why it coincides with recessions. And we know that the Fed, I mean, I didn't expect 50 basis points, but clearly they know things that we don't know about the economy. And that'll probably take me on to my next chart. And I think this is why they reduced rates by 50 basis points. This is Treasury yields, and it's looking at the 2-year minus the 10-year curve. So what this is actually looking at is inversion. So when you have long rates lower than short-term rates, then that's an inversion of the yield curve. That's basically telling you recession ahead. And what normally happens is you get this inversion, and then you get basically an uninversion. So the yield curve crosses over again into an uninverted situation, which is actually the normal situation. But when that happens, that actually signals recession about to come. So every time you can see we've ticked above this line, you get uninversion of the yield curve after there being strong inversion here, and you get uninversion, you get recession here, 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 here again, here again, here again, and yeah, again here. So that's what's happened now. So now the yield curve is uninverted. It has been inverted. That's when it's below this line. It's been strongly inverted. That was telling us recession is coming. And then shortly after you get the uninversion, you can see it's normally after the uninversion. So it's perfectly normal to get the yield curve uninverted. In other words, that's when long-term rates become higher than short-term rates then. So it's become uninverted. And that is a signal that recession follows reasonably shortly after. So I think we've got enough signs there to tell us that most likely recession is around the corner. So just going back.
It looks locked in.
Yeah. And then just going back to the charts, again, flipping back to the oil chart here, there's such a big divergence between oil and the S&P. I think that big gap will start to close soon. So you'll start to see S&P coming down, oil price coming up. What's likely to cause that? Well, you'd expect it to be geopolitical. I do not think that we've seen the last of this confrontation in the Middle East.
Well, and like I was saying, as I didn't anyway, the Ariane girl, they bet they were going to actually already invade, maybe, but the plans were leaked. Well, anyway, looks like possibly that's what happened.
Okay, interesting. Yeah, you need to get me in on the show earlier, and I like to listen.
I know, I haven't been doing better at it, but I went off this morning. I was kind of inspired, and then I was like, oh.
That's okay. So here we've looked at the dollar yen before. It's very, very important. So when we saw dollar yen falling down sharply, that actually was the stock market selling off. Right now, we're seeing dollar yen rising again. So this is effectively the carry trade is being, people buying back into the carry trade. So they're still borrowing from the very low interest rate yen, even though they raise rates, it's still very, very low interest compared to, for example, the US. So makes sense. If you can borrow at almost zero interest and you can invest it in US treasuries at quite a high interest rate, you're going to do it. So you'll take money from the yen, you'll borrow from the yen, you'll invest it in the US dollar. And that's why we see this rising of the US dollar against the yen. But at some point, again, that will likely reverse to the downside. I'd need to check on this. It looks like probably a 5-wave move down. I think it's a 1, 2, 3, 4, 5, but I need to look in much more shorter term detail to look at the internal wave counts. But it looks like 5 down. And whether we've got an A, B, C, 3 up here, again, I need to look. We've actually, this is smart. We can see here, I measured the A wave, transposed the B wave. I did this weeks ago. Gave a target 1.618, and look at it. We're just about at 1.618, almost exactly. And that's the golden ratio. The 0.618 is the golden ratio. And I know Bruce had some smart young guy on about talking about the Fibonacci ratios, the golden ratio, the God ratio, etc. And it's gone to, again, almost precisely 1.618. So potentially a turnaround coming there. And I have been looking at shorting the market. In fact, I have been shorting. I shorted yesterday. I've already closed, actually. I'm very, very nervous because obviously we've had a nice run up towards the election. We're getting a nice run with lower interest rates. It's actually, it's like catching a falling knife because I believe there's going to be a sell-off reasonably soon, but it's very, very dangerous to bet against the trend. So I'm being cautious with these trades, and it's not something I'd necessarily recommend, but if you're doing it, you need to keep a very tight control of risk and not place more than you can afford to potentially lose. But at the moment, it's been going well. So I'm looking to sell peaks. So I'm either looking to, within a market trading environment, I look to sell peaks or buy troughs. So whilst I'm expecting a turnaround soon, I'm basically selling peaks. If I thought there was a lot more to go in the market higher, then I'd be buying the troughs. So at the moment, as I say, I'm selling peaks. So I'll just jump straight over to Bitcoin. Again, I still think that this is altogether corrective movement higher. But even if it's not corrective, you could count this. I mean, I've got it counted as WX, and we're looking for a Y wave down. That could be potentially a nasty move down to come on Bitcoin. But even if this move down here was finished, corrective move was finished here at what I've labeled W. If it wasn't W, if it's just complete here, ABC complete, and we have what's called a leading diagonal, which this could be counted as a leading diagonal, this movement up here towards X. Even so, that is a bullish scenario, by the way. Leading diagonal means we've already started the uptrend again. So we completed this corrective downward move here. We've already started the uptrend potentially. But even so, that's probably the end of a leading diagonal there, and we're moving down in corrective manner, probably to around the 0.618. So even if this isn't part of a larger correction down and we started impulsively higher, even so, we'd expect some correction down, probably to the 0.618 level, which is about the 56,000, 56.9 level. So that's quite a lot lower than where we are now. I mean, it's $10,000 lower. It's quite a percentage. I guess it must be 15% lower or something. So I think that either way, I think we are due a pullback on the markets. We've had quite a nice run of late. We peaked the other day around 69, didn't we? Somewhere around 69.
Oh, yeah. Yep.
Yeah. Just looking.
Just enough for all the guys to say, "Oh, it's on, man. We're so back. We're going to 100,000."
That's exactly what they were saying.
I know.
Yeah. So, yeah, as I say, for me, again, I looked at extensions, and we had this 100% extension right at the level, pretty well, exactly at the level we reached. I mean, I think the 100% was 69.4. The actual level we reached was 69.5. So close, within a hair's breadth. That peak, so you could sell there with a stop loss somewhere above, and then potentially now you can protect those short trades and just ride it down. But if it goes higher, you're protected, you're guaranteed profit. That's the way I like to trade. So I look for these very important extensions, potential turning points. That's where I'll place trades, and you get the probability on your side of both the ratio of win to loss. So the potential win ratio is massive to the downside, even if it only goes to 61.8. We're still talking, as I say, 15% down, whereas the upside, if it moves up, the loss will be maybe 0.25%, something like that. So if it's 0.25%, even if you said it's 0.5% against 15% in your favor, it's still 30 to 1 risk reward, which is phenomenal. And then the chances of a turn down were actually quite high as well. So for me, it's better than 30 to 1. It's a fantastic trade. And yeah, I just think it's, as I say, you can protect it. I jumped in. I've actually closed at the moment. I think that we're probably not going to get anything major movement ahead of the weekend, although we have got durable goods orders Friday. That's always a market mover. So I'll be watching carefully on Friday, see what happens. XRP, again, I have not moved this chart at all. It's what we showed last time. We just had ABC last time. And this arrow was basically saying I was expecting downside from an ABC correction higher, expected downside. That's precisely what we've seen. I am expecting, this arrow was already on. I've not just put it on. These were already here. So I was expecting downside. We've seen substantial downside already. So if you're in that trade, again, risk reward was great. You can now put a stop loss in a guaranteed profit situation. Even if you only guaranteed $1 profit, it means you don't lose anything at worst. But it's already moved substantially in your favor. Potential for much more with a guaranteed profit. They're the trades that you really want to have on your side. We'll just have a look. DXY has really rocketed, hasn't it? Look at this dollar index, massive pump higher. So again, that's partly in response to weakness elsewhere around the world, and partly to do with the resilience of the US economy. It has stayed relatively robust, which is why the Fed have a bit of a problem. They've got all these conflicting factors. But as I said, I think they're looking at the yield curves. They're looking at the bond inversion and the lack of inversion right now. So they're looking at the bond markets, and that's what's informing them of what they're doing with interest rates. That's why they dropped by 0.5% and why they're probably going to drop by another quarter. And I think they were actually 99% positive now. They're going to lower rates again by a quarter. So that's almost nailed on, and it's just a couple of weeks away. But this strong movement higher, again, not good long term in terms of risk assets. At the moment, it's not hurt them. And as I said, I think that's because the reason for this rise has basically been, it's been largely to do with weakness of other economies rather than strength of the US. So it's not that the US is overheating and then they're going to need higher rates. In fact, they're talking about lower rates. All it is weaker international economies. And America has such a massive, vibrant internal economy that it can survive much better in the face of international difficulties. And so just in a comparative way, the US dollar is a much better bet, especially with interest rates as they are. And as I say, Japan is rock bottom. Everywhere else is reducing. We know that Europe just reduced rates, UK reduced rates, and they're going to reduce further. So they're all reducing and talking more about dropping into recession already, whereas the US are quite robust. So that's why money's piling into the US dollar right now, and it's seen as a good bet. But longer term, that will be a drag on the US economy, and it will affect risk assets longer term, I think. Just moving on to my favorite, this is the one I've been trading mainly. I still think there's potential for a bit of upside. This is the overhead trend line, just touching the peaks of the prices from that local high of, where was it now? Yeah, 209. So that was that local high of 209. Then the next local high, 193. And then potentially, if it continues to run that trend line, and so often just shows you the markets aren't completely random. So often it will just touch an overhead resistance and then bounce back down. And potentially that's going to happen. So that's why I'm being cautious, why I closed my position this morning. I had a short position in yesterday, jumped in at 168, closed it this morning at 165, because I think there's potential still for higher. And we may just move, higher for a little while. And just interestingly, I've got that arrow. It's on November the 7th. So we've got the election night, which Bruce says they're not even going to announce the results anyway on November the 5th. So we've got election night, November the 5th. They're not going to announce the results. They've got interest rate decision on the 7th. So all news will be out. I think that is a real strong candidate for a potential turn. So that's why I'm being cautious with my shorts. I still think the market is climbing this wall of worry right now. But I think once those election results are out, once we see the rate decision, I think that may be a potential turning point. But it's not a major long-term turning point. I still think that this is just a corrective move down, and I think we'll probably turn down maybe around that time. But it's not the end of it all. This is just a corrective move, sideways, slightly down. It's basically a bull flag with the flagpole higher, flag waving slightly down. But eventually we will push higher with Solana to challenge the previous all-time high of 258, and with Bitcoin probably to exceed the all-time high of 73,000. So a lot of tokens pushing substantially higher. Ethereum, I think, will quite possibly challenge its previous all-time high. We'll get after a bit more of a correction on XRP, we're going to get another push up in XRP. That probably won't actually challenge its all-time high, but we could still get a decent little pump on XRP. Same with lots of assets. I just think that they'll all, if we do get a pullback after the election, I think we will then, after that at some point, maybe we'll get a Christmas rally to push us to new all-time highs. That's often the case, isn't it?
It is. Yeah, it loves to rally at Christmas. Back in the early days, I used to think that it was because people were buying stuff with Bitcoin. I'm like, that's why it's going up. We're talking like, when Bitcoin was like $700, stuff like that. But yeah, I don't know. It does always rally at Christmas. I think these days I attribute it to other things, like people buying Bitcoin for their loved ones. I don't know. It likes to rally at Christmas.
It's actually down to Santa Claus, to be honest. But anyway,
what's that?
It's down to Santa Claus.
It is. It's Santa Claus. Exactly.
Yeah. So looking at gold, all-time highs yet again, just never stops at the moment. We will get a pullback at some point. Again, it'll be a corrective pullback, I believe. Corrective meaning that the trend will still be higher. Correction is just a correction of that uptrend, but there'll still be higher highs to come after that. So I'm still very positive on gold, even if we get a bit of a pullback. But it's like the other assets. I'm still actually extremely positive on Bitcoin, even if we got a nasty pullback, which is quite possible. And again, there's no certainty with this. People talk about no way this is happening or that's happening. Well, we don't know for certain. It's all basically managing your risk and your reward. I believe, I'm reasonably confident, we'll see new all-time highs for Bitcoin. And I'm confident that even if we get a pullback on gold, we'll see new all-time highs yet again for gold. So across the board, I think things are looking very positive. Just checking if there's anything else we need to be looking at, particularly at the moment. I think we've covered the major assets. The pound, as I said, the reduced interest rates. The UK economy is looking pretty shaky, although the IMF did actually upgrade UK outlook a little bit. But even so, it's a pretty shaky outlook. So I'm expecting the pound to continue to fall against the US dollar, and that's precisely what we've seen. We said it was going to happen, and it's precisely what's beginning to happen. And I think it's been a major corrective move from that low point we had at 103, was it? Somewhere around there, I think. Yeah. Looks like a corrective move to the upside. I don't see anything impulsive about that. We've already overlapped on the downside, overlapping this high here. The movement down has overlapped it. After exceeding it, it's overlapped to the downside. So it looks like a corrective move to the upside. We may still chop around. Maybe we'll get another final push higher before it sells off. But I've told you, my prediction almost a year ago now was that the pound is going to go below the dollar. So it's going to flip.
Yeah. How close are we now?
Oh, we're still a long way away. We're 129 right now. So I did expect, as I said, after that 103, we're going to get a nice big correction to the upside. And if you look at the pound longer term, that was always on the cards that we were going to get a good correction. Not sure. It could be complete, or we may have a final push up, maybe to take us to that golden ratio, 1.618. In fact, where are we at here? Let's just see.
I'll tell you, when that happens, that'll be remarkable. I love London. I'll have to go just to spend a stronger dollar.
Yes.
In the country that I've always just been like, oh gosh, how much is that coffee? Like, how much is that beer? Like, how much is the hotel? Oh my gosh.
Yeah. Quite interesting.
It was 2 to 1.
Absolutely, yeah. That must have been painful.
It was painful.
Yeah,
They're like, oh, it's only 90 pounds or 300 pounds for the hotel or whatever. But yeah, it's $600.
Yeah. So I measured this A wave, or this wave up. I transposed to here. Now, 0.5 we've got here isn't actually a Fibonacci number, but interestingly, it often happens, and actually it very often happens with the pound dollar for some strange reason. So it actually moved up 50% so far, precisely on the dot, 50%, the extension of this first wave higher. So it could already be over. So this corrective ABC movement could be over, with C being precisely 50% of A. So that's a fair possibility. And I think the A wave is made up of 3 waves here, corrective move down, and 3 waves here. So it's probably a WXY wave of some sort. And as I say, I'm expecting at some point, and it'll be probably next year, I think we're going to see the pound crashing massively low and the dollar strengthening massively. So you're going to be able to come to London, and instead of spending, £100 being whatever it is in dollar, £100 is just going to be $100 or better.
Crazy.
Yeah.
Crazy.
So I think we'll welcome you to London next year. So all in all, that's pretty well it. We've seen a downturn in most cryptos at the moment. It's a bit of a down day. I think we are very close. We're treading water really ahead of, obviously, durable goods orders Friday is actually quite important, but we're treading water really now ahead of election day and ahead of interest rate day.
Election day, interest rate day, and the big cloud hovering over everything is the Middle East.
Absolutely, yeah.
Yeah.
So that's why I'm I'm extremely fearful. I dare not go long in the markets right now, in risk asset markets. I dare not go long, because if something happened overnight while you're asleep in Israel or something, with Israel, Iran, whatever.
It's like, boom, big red line down.
You could wake up to, that big red line, and that's not what I want. So that's why I'm not prepared to go long in the market just now. But maybe if if something happens and there's a massive sell-off, then maybe we'll look at the risk levels again and take our decision then. So yeah, that's it for today. I hope it's helpful.
Awesome.
Great. And thanks for having me again, and look forward to tomorrow. And again, anyone out there listening, if there's any particular subject you want me to cover, economic, about particular assets, whatever, do let me know. I love to try and answer questions. So thanks, Bruce. Thanks, everyone.
Amazing. Thank you, Matt.
Cheers.
Cheers. The great Matt Dixon with the Market Watch Report. I'll tell you what, it has been an absolute pleasure to work with Matt. Almost a year now. We're coming up on a year. In December, it'll be a year doing the Impact Money Show every day, Monday through Friday. And it has been a great way to, it's crazy times that we're living in. It is crazy times. It has never been a time in my life. Matt's been around even longer than me, and I've been around a while. It's never been a time in my life when the world has been in the situation we're in. I mean, we're like on the brink. We're on the brink. No, in a number of ways. Obviously, we have this whole new asset class that has completely turned the world upside down. Nobody was even talking about a banking cartel. What banking cartel? Nobody, when I was a kid, banking cartel, what are you talking about? We all thought that the Fed was a federal government thing. Now everybody knows that the Fed is just a bunch of cartel guys that have control of our money and our country, right? We have war over in the Middle East. We have war in Europe again. We have crazy elections. We have just absolutely insane. We're going to space. We have the great Elon Musk. Elon Musk is taking us to Mars. We're going to be an interplanetary species. And when we become an interplanetary species, and this is one thing that Elon has instilled in a lot of us, and certainly instilled it in me. What that does is our chances of lasting as a human race, as a species out here in this great universe, is increased exponentially. Because if something happens here, we also have there. We'll have people there. Something very, very major would have to happen here to kill all the life. But it happened with the dinosaurs, right? I mean, nobody really knows what happened with the dinosaurs. We theorize that a big crater or a big asteroid came in and killed everything, but we really don't know. We could be in some type of a simulation and they decided to kill off all the dinosaurs. I mean, who knows? Nobody knows. But we do know that the more places that we're at, obviously, the better chances we have of continuing. And so that's pretty great. He has really inspired a generation of people, our entire generation, at a time when we really need inspiration. You have the powers that be out there that are, always trying to enslave everybody, debt enslavement. My man Tucker Carlson, he came out now. He had on, I'll cruise over because I always forget this guy's name, but he had on a guy and he said, look, the problem is not China. The problem is not Iran. The problem is debt, slavery. And it's what I've been talking about all the time. And I'll tell you what, it is something else to, at this point in my career, to have been right so many times. Around here when I was contracting here with the government years ago, and doing my thing, and I got into Bitcoin, people laughed at me, they scoffed at me, they said don't get involved with that stuff, this is crazy, this is whatever they said. And it was very interesting that I was right. I was right. It's good to be right, but at the same time, a lot of times when you're right, you're going against everybody else, and that's not fun, right? That's not fun. You don't like to go against everybody. You don't always want to be fighting other people. But then as well, Trump ran, and I went full in for him for the 2016 election, put caution to the wind and just went for it. And of course, I was right about that. A lot of people still don't like him, but you got to say the economy was booming. And we had peace. And, the guy, to be totally honest, I mean, I don't like all the stuff he does. I don't like a lot of the stuff he does. I don't like who he hires. I mean, he's going on the campaign trail with the warmonger, I guess, Nikki Haley. I mean, you know, so that probably means that she has a position in his administration somewhere, even if it's at the UN or something where she was last time, nailed in. I mean, if she's on the campaign trail with him, she's got a position pretty much nailed in. That's the way it works. She'll definitely get a clearance. She didn't support Trump through all of the shenanigans, you know, all of the cheating and everything else that happened. Irregularities, we'll call them. The irregularities. So she'll be able to get a clearance, but you can't get a clearance. I'm still on about that. Well, it's something that most people don't know. If you're not here in Washington, you don't know. You don't know that you can't get a clearance. You're not qualified. You're a Trump supporter. Like, basically, if you're a Trump supporter, you can't work for the government. You can't work for the administration, even if Trump gets in. Unless they fire 70% or more of the government. And if they do that, then they'll probably be able to get some people in positions that are more adhere more to the U.S. Constitution. So the great Tucker Carlson here, he had on let's see here, Dave Ramsey. Now, I played a video of Dave Ramsey before, but pretty interesting. So you should go over and you should watch this interview. And he says, which has destroyed more lives of Americans, Iran and Russia, or our domestic credit card companies? David Ramsey on the real threat we face, which is debt, slavery, which I talk about all the time. Debt, slavery. Okay. You can't, people, let's say you have a job, right? Now, here you go. And this even plays into what I was saying. Anyway, this even plays into what I was saying with the whole getting a government clearance. I'm going to pull that back up in a minute. But let's say you have a government clearance, right? And you have to pay your bills. You have to pay your mortgage. You've taken out some ridiculous mortgage on your home, which you're going to pay double. You're going to pay double in the end for your home. Double, more than double. Cars. Do the math. You take a loan on your car, you're paying like so much money. It's crazy. But you have some government clearance and you can't openly support Trump when he needs it because you'll lose your job. And if you lose your job, then you can't pay your bills. And if you can't pay your bills, then you lose everything. You lose the house, you lose the wife, you lose the cars, you lose it all. You can't pay your bills. And that's debt slavery. That is debt slavery. Here we'll give you money to get whatever you want. They inflate the prices, though, so much. The prices of everything wouldn't be so high if we didn't have this debt slavery system from the banking cartel that has taken over the country. And I talk about it, but I don't think people even realize it. In 1933, they used the US dollar to steal all of the gold from your family. They took all the gold. They told you they would give it back, and they never did. That was the Federal Reserve, and Eisenhower signed an executive order, and they gave all the gold, just like when they collect taxes, they don't give it to the government. They collected all the gold, and they gave it to the Federal Reserve, the banking cartel. They still have your family's gold. I want it back. Don't you want it back? It's our gold. They stole it. They stole it. They stole our gold in 1933, and nobody ever even talks about it. They gave you paper dollars, and then they diluted the mess out of the paper dollars, and they printed them up and printed them and printed them and printed them and made them worth freaking nothing. He goes on, how banks exploit you with debt, how cash changes your psychology, why our leaders oppress the poor, the unknown side effects of debt, the lies of building credit. And this is why Dave's proven success plan to pay off your debts, the student loan forgiveness scam, Dave's key to a successful marriage, the key to building wealth, 3 things you're probably wasting money on, the national debt problem, Kamala Harris's economic plan, Donald Trump's economic plan, an employer's moral obligation to their employees. So I encourage everybody to go over to the great Tucker Carlson and watch this. I talk about it all the time. The Federal Reserve, the central banking cartel, the banking cartel took over. They all hail from Israel. They took over the United States in 1913. In 1914, we had World War I. And also in 1913, they started the IRS. The IRS is the conduit of the banking cartel. This guy I have on every day because he says end the Fed. He's got legislation to end the Fed. We need to end the Fed in order to free ourselves. So 1913, we get the Federal Reserve and we get the IRS. 1914, we go to war. World War I. Bankrolled by these guys and pushed by these guys. These guys, people say, oh, these people are the ones who got us in World War II and now are getting us in World War III. They're the ones who got us in World War I too. They like us to fight their wars. 1933, they stole everyone's gold. They made it illegal for the United States citizens to own gold. When I was a kid, I used to think that, oh, Nixon was a bad guy. He took us off the gold standard. All Nixon did was stop us from paying as a government, as a country, paying for dollar bills in gold, because the country used to be able, a different country used to be able to trade it in for gold. You weren't allowed to own gold, but the Federal Reserve, they were, of course, those guys were allowed to own gold, and other countries were allowed to own gold, and so they would trade in the U.S. dollars that they had for gold, and we probably, as a country, out of gold. They have all the gold. Wouldn't be surprised if Fort Knox is empty. And I think Nixon knew that. Nixon was like, well, we don't have gold to pay everybody, so I'm going to take us off of this quote-unquote gold standard, which we weren't on anyway. They were already printing money out of thin air. That's why we had inflation. Okay. And then in 1970, they made it legal again for 70s. They made it legal again to own gold in some quantities. Of course, they'd already inflated the price way up. Nixon took us off the gold standard. He also said some things that really upset the banking cartel, and they got rid of him. That's how it is. Everyone always said Nixon was a bad guy. I always kind of thought he was not such a great guy. Looking back at history, knowing what I know, I don't think he was a bad guy anymore. Here's the other part about that. They always get rid of the good guys. So if they got rid of him, he must have been probably a good guy. Right? It's kind of like the inverse Kramer thing, I guess. Anyway, people don't understand. They don't understand how bad the central banking cartel is. And it's pretty important that we understand. Look here, bank. Here we go. I'm going to play this. I've played it before. You may have seen it. This is... Here we go. The central bank. Big scam. Oops. Big scam here. I'm going to play you. This is just a brief history on it here.
So what is a central bank? A central bank is an institution that produces the currency of an entire nation. Based on historical precedent, two specific powers are inherent in central banking practice: the control of interest rates and the control of the money supply or inflation. The central bank does not simply supply a government's economy with money, it loans it to them at interest. Then, through the use of increasing and decreasing the supply of money, the central bank regulates the value of the currency being issued. It is critical to understand that the entire structure of this system can only produce one thing in the long run: debt. It doesn't take a lot of ingenuity to figure this scam out. For every single dollar produced by the central bank is loaned at interest. That means every single dollar produced is actually the dollar plus a certain percent of debt based on that dollar. And since the central bank has the monopoly over the production of the currency for the entire country, and they loan each dollar out with immediate debt attached to it, where does the money to pay for the debt come from? It can only come from the central bank again, which means the central bank has to perpetually increase its money supply to temporarily cover the outstanding debt created, which in turn, since that new money is loaned out at interest as well, creates even more debt. The end result of this system without fail is slavery, for it is impossible for the government and thus the public to ever come out of the self-generating debt. At this time, the dominant families in the banking and business world were the Rockefellers, the Morgans, the Warburgs, the Rothschilds. And in the early 1900s, they sought to push once again legislation to create another central bank. However, they knew the government and public were very weary of such an institution, so they needed to create an incident to affect public opinion. So, J.P. Morgan, publicly considered a financial luminary at the time, exploited his mass influence by publishing rumors that a prominent bank in New York was insolvent or bankrupt. Morgan knew this would cause mass hysteria, which would affect other banks as well. And it did. The public, in fear of losing their deposits, immediately began mass withdrawals. Consequently, the banks were forced to call in their loans, causing the recipients to sell their property, and thus a spiral of bankruptcies, repossessions, and turmoil emerged. Putting the pieces together a few years later, Frederick Allen of Life magazine wrote, "The Morgan interests took advantage to precipitate the panic, guiding it shrewdly as it progressed." Unaware of the fraud, the Panic of 1907 led to a congressional investigation headed by Senator Nelson Aldrich, who had intimate ties to the banking cartels and later became part of the Rockefeller family through marriage. The commission, led by Aldrich, recommended a central bank should be implemented so a panic like 1907 could never happen again. And in 1913, with heavy political sponsorship by the bankers, Woodrow Wilson became president, having already agreed to sign the Federal Reserve Act in exchange for campaign support. And 2 days before Christmas, when most of Congress was at home with their families, the Federal Reserve Act was voted in, and Wilson in turn made it law. A world banking system was being set up here, a superstate controlled by international bankers, acting together to enslave the world for their own pleasure. The Fed has usurped the government. Now, the public was told that the Federal Reserve System was an economic stabilizer, and inflation and economic crises were a thing of the past. Well, as history has shown, nothing is further from the truth. The fact is, the international bankers now had a streamlined machine to expand their personal ambitions.
It's alive! It's alive! It's alive!
For example, from 1914 to 1919, the Fed increased the money supply by nearly 100%. Resulting in extensive loans to small banks and the public. Then, in 1920, the Fed called in mass percentages of the outstanding money supply, thus resulting in the supporting banks having to call in huge numbers of loans, and just like 1907, bank runs, bankruptcy, and collapse occurred. Over 5,400 competitive banks outside of the Federal Reserve System collapsed, further consolidating the monopoly of a small group of international bankers. Privy to this crime, Congressman Lindbergh stepped up and said in 1921, "Under the Federal Reserve Act, panics are scientifically created. The present panic is the first scientifically created one, worked out as we figure a mathematical equation." However, the panic of 1920 was just a warm-up. From 1921 to 1929, the Fed again increased the money supply, resulting once again in extensive loans to the public and banks. There was also a fairly new type of loan called a margin loan in the stock market. Very simply, the margin loan allowed an investor to put down only 10% of a stock's price, with the other 90% being loaned through the broker. In other words, a person could own $1,000 worth of stock with only $100 down. However, there was a catch to this loan. It could be called in at any time and had to be paid within 24 hours. This is termed a margin call, and the typical result of a margin call is the selling of the stock purchased with the loan. So, a few months before October in 1929, J.D. Rockefeller, Bernard Baruch, and other insiders quietly exited the market. And on October 24, 1929, the New York financiers who furnished the margin loans started calling them in masse. This sparked an instantaneous, massive sell-off in the market, for everyone had to cover the margin loans. It then triggered mass bank runs for the same reason, in turn collapsing over 16,000 banks, enabling the conspiring international bankers to not only buy up rival banks at a discount, but to also buy up whole corporations at pennies on the dollar. It was the greatest robbery in American history. But that didn't stop there. Rather than expanding the money supply in order to recover from this economic collapse, the Fed actually contracted it, fueling one of the largest depressions in history.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.